Hey guys, how are you all? I hope you're all safe at your homes and keeping good with accountancy. In our previous sessions, we learned about how to record a transaction in journal. And in this session, we'll see how a basic accounting equation is formed and satisfied while recording each transaction in the books of account. So let's start with today's topic without wasting any time. The first question that arises in our mind is that is it something like those mathematical linear or quadratic equations or something like that? Relax, the answer is no. Accounting equation is as simple as assets is equal to liabilities plus capital. Yes, really. It signifies that the assets of a business are always equal to the total of its liabilities and capital. And this is the reason it is also known as the balance sheet equation. As you must have noticed a balance sheet which has assets on one side and liabilities and capital on the other side, and the balance sheet is always balanced if only it's correct, right? So the accounting equation is assets is equal to liabilities plus capital. So now can you tell me how to calculate capital? Yes, assets minus liabilities. And how to calculate liabilities then? Correct, assets minus capital. So now another question that arises is how to show that this equation is satisfied after each transaction. For this, we just need to analyze the impact of each transaction on the different accounts. Alright, and accordingly add or subtract the amount in these accounts. Also, we need to mention the equation after each transaction to check whether it is satisfied or not. So let's understand this thoroughly with the help of an example. In this case, the first is introduced as rupees 5 lakh as cash and 80,000 as stock. Now if you notice and analyze the net impact, cash would be increased by rupees 5 lakh, stock would be increased by rupees 80,000 and capital would be increased by rupees 5 lakh and 80,000. So this is the basic structure of accounting equation. Here we have to mention the brief transaction and we increase cash and stock by rupees 5 lakh and 80,000 respectively and increase capital with rupees 5 lakh 80,000. And if you notice, the equation is balanced. Next, purchased furniture for rupees 30,000 and paid rupees 15,000. So do one thing, pause this video and try to analyze this transaction yourself and the impact of this transaction and give marks to yourself. It would be fun, okay? So in this case, it is a clear example that the furniture is purchased partly on credit. So what we need to do is increase furniture with rupees 30,000 and our liability is also increased by rupees 15,000. And as cash is moved out of the business with rupees 15,000, we decrease the cash. So if you see, the equation is balanced again. Next, deposited rupees 2 lakh in bank. Now in this case, cash is decreased by rupees 2 lakh but bank is increased by rupees 2 lakh. So the net impact lies in the assets column only. So the equation is balanced. Next, goods purchased for rupees 12,000 in cash and 8,000 in credit. Now let me know the total amount of goods purchased. Yes, it is 20,000. So goods purchased are rupees 20,000 but cash is moved out of the business by rupees 12,000 and liability is increased by 8,000. Correct? And the equation is balanced again. Next, goods amounting to 24,000 are sold on credit. Now in this case, stock is moving out by rupees 24,000, so we decrease stock. And as debtors are increased by 24,000, we increase debtors. So the net impact lies in assets column and the equation is balanced. Next, check issued to supplier of furniture for the balance amount. And what was the balance amount here? Rupees 15,000. So we have done is rupees 15,000 are reduced by cash and liabilities also get decreased by rupees 15,000 and the equation is balanced. Next, withdrawn by owner for personal use, rupees 36,000. We know that it is known as drawings and in journal also we used to settle drawings with the capital account. So we decrease the capital account by 36,000 and cash by 36,000. And again, equation is balanced. Next, paid rent of rupees 12,000 by cash. Now in this case, as cash is moving out, we decrease cash by 12,000. But what about rent? How would we show an expense? Or in this case, if it is an income, then how do we show incomes? Now we know that expenses and incomes just impact directly or indirectly on our profit and loss, and profit and loss impacts on our capital. So if there is a loss, we decrease our capital, and if there is an income, we increase our capital. And in this case, we have paid rent in cash, so we decrease our capital by 12,000. Correct? And equation is balanced again. Next, depreciation charged on furniture at 10%. Now we know that depreciation is the reduction in the value of a fixed asset. So we reduce the value of furniture by rupees 3,000, which is 10% of 30,000. And again, as it is a loss, we decrease our capital with rupees 3,000. Last, goods damaged due to fire in godown, rupees 7,000. Now in this case, goods are damaged, so we know that we have to decrease our stock by rupees 7,000, and again, as it is a loss, we decrease our capital by 7,000. Okay, I hope you understood this basic and thoroughly how an accounting equation statement is prepared for our exams. But next are some objective type questions that will help you fetch more marks easily in your examinations. Next, if a capital of a business is rupees 1,40,000 and liabilities are rupees 60,000, calculate the total assets. It is the most simplest form of accounting equation possible. Just apply the formula. Assets is equal to liabilities plus capital. So all we need to do is add up 1,40,000 and 60,000. Total assets comes out to be rupees 2 lakh. Easy. Next, if total assets of a business are rupees 2,70,000 and net worth is 1,50,000, calculate the creditors, which is liability. And how do we calculate liability? Assets minus capital. Net worth is also known as capital. Okay. So 2,70,000 minus 1,50,000. Our creditors comes out to be rupees 1,20,000. It's that simple. Next, if the capital of a business is rupees 5 lakh and liabilities are rupees 1,50,000 and loss of rupees 25,000 is also there, how do we calculate the total assets? Remember, total assets are always calculated on the closing capital. And how to calculate the closing capital? Opening capital minus loss. That is rupees 5 lakh minus 25,000, and as we have to add up the liabilities, rupees 1,50,000, the total assets comes out to be rupees 6,25,000. Get it? Now, next is A commenced his cloth business on 1st April 2019 with a capital of rupees 70,000. Now this is a opening capital. On 31st March, his assets were worth rupees 1 lakh and liabilities were 20,000. So can we calculate the closing capital? Yes, assets minus liabilities. That is 1 lakh minus 20,000. So the closing capital comes out to be rupees 80,000. Alright. But this question has a slight twist. Also, we need to calculate the profits earned. Now, how to calculate the profits? Obviously, we know this, that closing capital minus opening capital can give us the total amount of profit or loss incurred or earned during the year. So, in this example, our closing capital was 80,000 and our opening capital was 70,000. So, profit comes out to be 10,000. Okay, I hope you understood everything that we discussed today. I guess you would have find it easiest too, just like every other student. In case you have any queries, feel free to mention them in the comment box and I'll try to cover each of them further. Please share this video with all your friends in need, as it would definitely be helpful. Till then, stay tuned for our next sessions. Thank you.